About a year ago, an informal 50-year-old agreement between Saudi Arabia and the USA to only buy and deal in petrol with the dollar came to an end. Basically, it wasn't renewed. Certain deals were signed between US companies and Saudi, but it was not an official government thing. This deal meant that in order for most of the world to acquire oil or deal in oil, they had to acquire a dollar in order to buy oil or sell oil. Hence, the petrodollar became a thing. Here's a quick history from Andrzej to give us a quick catch-up.
But in 1971, when the country was on the verge of bankruptcy, the US left the gold standard. So the world entered into a new monetary order, where the dollar became the center of everything without being backed by anything. And the world came to a new agreement. We said, okay, all countries will now sell their stuff and their energy in dollars, and then recycle those dollars back into US assets like treasury bonds and the US stock market. So the stock market went up forever, and Americans got to live beyond their means. That kept the demand for the dollar high, and it allowed America to run trade deficits where we could borrow cheap money, we could offshore jobs, and we could consume more than we made. But for that system to work, the dollar has to stay strong, and it stayed strong thanks to the military-industrial complex. And all of that is changing. And what we saw at the most recent World Economic Forum was a conversation about how to divide that power.
The rules-based order is fading. We believe that from the fracture, we can build something bigger, better, stronger, more just.
And what we're seeing now are new trade agreements and countries diversifying their reserves. So instead of holding dollars in the form of treasuries, they want more forms of hard money. Now, countries are not necessarily dumping the dollar overnight because that would negatively affect their own wallets. But what they are doing is they are diversifying their reserves. Central banks are buying more gold instead of only holding US treasuries. And China has already built the payment system that does not rely on US banks. At the same time, the United States has a huge debt problem and a shrinking industrial base, which means it can't keep running the old model forever, where it imports everything, it exports paper money while funding the forever war model around the world.
Andrzej there. Even though it was just an informal agreement, it guaranteed Saudi Arabia protection by the USA and had other benefits. Here's this clip from Kim Iverson explaining it in a little bit more detail.
So back in the 70s, when Saudi Arabia made the petrodollar deal, the U.S. wasn't using sanctions as a weapon. But now, as the U.S. has increasingly used the dollar as a form of warfare, you can imagine that Saudi Arabia sits there and wonders why in the world they're only accepting one method of payment that the world is increasingly being cut off from, right? Now, of course, Saudi Arabia didn't just sell oil for dollars for nothing. They got something out of the deal. So what are they giving up by allowing this deal to expire? Well, the deal in 1974 guaranteed Saudi Arabia's security from their surrounding neighbors. We basically agreed to a defense pact. We also agreed to continue legitimizing the monarchy, keeping the Saudi family in power, legitimizing them and dealing with them. Now, without the agreement, Saudi Arabia is now free to trade oil in whatever currency it wants. And this makes it easier for other countries, especially the sanctioned ones, to purchase oil in a currency that they have more access to. So either their own currency, like in the case of China and India, potentially Russia, or the currency of a country not sanctioning them. So if you're Venezuela or if you're Syria, or the US increasingly talks about sanctioning China, which if it's becoming the largest economy in the world with 5 times the people and 5 times the need for oil, why would Saudi Arabia want to limit how much money it can make by essentially limiting China's access because China can't get a hold of the dollars, right? Well, the petrodollar is the nickname given to dollars earned from oil exporting nations selling their oil. So this whole system started in 1974 when oil prices shot up and Saudi Arabia made a deal with the US to sell oil exclusively in US dollars. Now, this created a constant need for dollars worldwide because everybody needs oil. And to buy oil at that point, you needed dollars.
Now, since last year, there are increasing signs that this petrodollar is coming under pressure and is going to diversify over time. Other countries can now deal in whatever currency they choose. BRICS, anyone? This could make it more difficult for the US president to pull sanctions on any country they want to, i.e. Iran, Russia, North Korea, so on. And especially now, since the debacle that was the tariffs last year, and Trump pulling away from NATO countries, they're trying to find other ways to make sure they're not affected by the dollar. Hence why last year a lot of countries started buying gold and silver. Now, cut to March 2026. An Iranian member of parliament said that they're now targeting any financial institution that supports the Trump-Iran-Israel war. They want to piggyback on this ongoing sentiment about moving away from the dollar and wreak havoc on America's financial system. So I watched this clip from Inner Operator a couple of days ago.
The Iranian parliament speaker issued a new warning.
In a dramatic escalation, Tehran has declared that financial institutions funding the U.S. military are now legitimate targets. The warning was issued by Iran's parliament speaker, Mohammad Bagher Ghalibaf. According to Ghalibaf, any entity investing in or financing the U.S. military apparatus could face consequences. This includes global investors, financial institutions, and even sovereign funds.
Day after day, we see the rhetoric creeping toward finance, technology, and where they intersect. We've talked about the potential for Iran to utilize blockchain technology to make the verification of yuan payments more efficient. There are already rumors that crypto is being used to settle payments to get through the strait. We already know that Iran has used Bitcoin to fund its proxies and that they've also used stablecoins like Tether to evade US sanctions. And now we're seeing the Iranian threat of financial surveillance. If Iran is declaring war on the US dollar, then what exactly do they expect to take its place? Is it purely the Chinese yuan? Do we see the world moving into a gold-backed system, even when we're in the middle of a digital age? Could it be that we are witnessing the creation of an entirely new monetary standard in real time?
We know that there was a project known as mBridge that had a successful beta run by the Bank of All International Settlements, the BIS. And they did this in conjunction with the Bank of Saudi Arabia, the Central Bank of UAE, the Hong Kong Monetary Authority, the People's Bank of China, and I think the Central Bank of Thailand. mBridge uses a blockchain distributed ledger system for cross-border payments. I think under pressure from the USA, they decided to put it aside for a while, even though the test run was very successful. So could countries be going back to this after this war? Iran and other countries are already using kind of stable coins, Tether. They're using Bitcoin for payment settlements. They've been using it for payment settlements for the virtual toll at the Strait of Hormuz at about 2 million a pop. They're trading in oil with India, Russia, and 3 other countries. As the Inner Operator said, there's also chatter of Iran using blockchain technology to verify yuan payment, moving further away from the petrodollar. So after this war, could we see countries going back and retesting the mBridge system in order to circumnavigate the petrodollar? I'm Alexander F. Onileri from Kellybone Crypto. Please like and subscribe, and let me know what you think below. See you next time.